Andrew, welcome to the show today.
I'm ecstatic to be here. Thank you for having me.
Well, I'm excited to get your story because you quit your W-2 last year,
Mhm.
and gosh, we want to know how to do that because that's what we want to know. How do we get real estate to get out of whatever we're doing? Give us options. But let's rewind the clock a little bit here. When did you start getting into real estate? When was that? What was going on in your life?
So, getting into real estate all started with an epiphany, and the epiphany I had was during COVID when I read Rich Dad Poor Dad. When I came to the realization that maybe the American dream wasn't what it's all cracked up to be. Prior to that, I got a good education. I got a bachelor's, I got a master's, I got a job at a prestigious institution, the Broad Institute of MIT and Harvard. I was a certified project manager, had a nice swanky condo in the city. Like, I did it all. I made it. I followed the formula. But at the end of the day, like, I really felt empty when I came home from work. I really felt like I had so much that I could do, like, that I was still left on the table, right? And when I read Rich Dad Poor Dad, that really I really came to the realization, like, that maybe there's something to this real estate thing. And that's when I decided to look at my net worth. And at that point, my net worth was $250,000. $200,000 came from this one bedroom condo I completely forgot about. It literally took me 10 years to save up $50,000. And that was really kind of a light bulb went off in my head. It's like, maybe there's something to this real estate thing. So at that point, I did a HELOC on my one bedroom condo for around $200,000. And I started house hacking some triplexes in Worcester, Massachusetts, which is 45 minutes west of Boston. I got to about 3 or 4 house hacks, started joint venturing on some triplexes, some 5 or 6 plexes, got up to about 30 units, ran out of my own cash and started raising money from investors. And 4 years later, I'm up to around 350 doors, and I own a property management company where we self-manage around 250 doors.
All right, so that's a pretty good journey. You decided to scale a little bit. You got started small, and you kind of went from there. I You said one of the hardest things I find is people who have well-paying jobs like you did,
Mhm.
great education.
Yes.
I feel like the inertia, the status quo is so strong that many people don't actually do what you're doing, and that is actually do something.
Mhm.
How, how did you overcome that? Was that an issue for you, by the way? And because and how did you overcome that, right? Because you have such a strong plan B, which is like, oh, it's not going to work out, or something a little more tedious, or something goes wrong. You're like, ah, it's no problem. I'll just go back to what I was doing before. How did you overcome that pull?
So, I mean, you bring up a lot of good points. I mean, at the end of the day, like, I held on to this job for literally as long as I could. During my, ascension in real estate, I built up all these units. I was an investor focused agent, hosted one of the largest real estate meetups in Worcester. I accumulated hundreds of doors, and I still held on to that W-2 as long as possible. And the reason I did that was purely out of fear. Like, it was fear that, what would happen when I didn't get a consistent paycheck. And what really pushed me out of that fear was being part of amazing masterminds, for instance, Go Abundance, where, they essentially pushed me to quit my W-2. I mean, literally at an event, I got up in front of everybody and explained, the question they asked was, what's holding you back? And I told everybody what's holding me back is leaving my W-2. And literally the host of the event took me aside. He's like, you got to quit your job by this date, or we're going to shave your beard. We're going to shave that beautiful beard of yours. And I'm like, you ain't shaving my beard. And then the audience of 500 people proceeded to chant, quit your job, quit your job, quit your job. And and I think at the end of the day, I ended up quitting my job about 2 3 months later, primarily due to that mastermind kind of pushed me over the edge. And honestly, that was the best decision since leaving my job in June. I probably 4 or 5x my annual income.
Yeah, it's amazing when you can focus full time on this business.
Totally.
Just your productivity goes so much higher. So you got into this condo. It sounds like you actually bought this condo a little bit before. Did you buy this condo before you read Rich Dad Poor Dad, or what came first?
Yeah, so I bought this condo back in 2015, and I was always financially astute. I always knew how to save, but I didn't know how to invest, right? And back in 2015, I knew I didn't want to pay rent, so I literally found the cheapest condo I possibly could in Boston for 222,000, and that's kind of And then at that point, I just continued with my W-2 kind of trajectory before finding real estate.
All right. So what happened specifically when you went and because this is essentially you're living there. So it's not an investment property. You live there.
Correct.
What was the first thing that you did in real estate when you what was the first investment property that you bought?
So the first investment property I bought was my first house hack in Worcester, Massachusetts, 151 Ingleside Avenue. And that's when I combined an FHA loan combined with my HELOC, my home line of credit. And I used around $45,000 from that line of credit combined with an FHA loan to house hack a three family. I bought that for around $560,000. 2 units rented for $3,200, where I lived in the third, and my mortgage was $3,200. So I essentially lived for free minus capex and repairs.
Now, what made you do that, Andrew? So why did you buy that house hack? What were you trying to do?
So the reason why I really did that was, people think of W-2 as a safe trajectory, but I literally had the opposite impression. I literally thought, working for 30 to 40 more years and the status quo scared the living hell out of me. Like, I could not do this for 30 to 40 more years. And when that light bulb went off, I was like, I really have to make a change, because what scared me most was the status quo. And that's what really pushed me over the edge. I ended up house hacking that triplex, and then I rented my condo, and I essentially like removed my living expense, increasing my savings rate by 40 to 50% with that one move.
All right, so I'm asking you, why did you take action at that particular moment? Because there's a lot of people who talk about doing this and that, getting into real estate, doing these things. I mean, you still had 30, plus years time. Why is there something that happened in your life where you said, I'm going to do this thing now versus next year or the year after?
Yeah, I mean, I think it just comes down to, during COVID, you only run out of so many vices that I could have done. I could only watch so many movies. I could only play so many video games. I could only read so many books. And at that point, I really had to come face to face with myself as like, is this the life I wanted to live? And literally, I had tears rolling down my cheeks of, reading Rich Dad Poor Dad. And the answer was absolutely not. Like, I wanted freedom. I wanted to control my time, and I wanted to really live the life I wanted to live, which, travel the world, live with experiences, and really like focus on relationships. And I had none of that. And that's what really woke me up. It's like, I only have one life. Like, do I actually want to like regret when I'm 70 or 80 years old lying on my deathbed? Or do I actually want to, appreciate and be glad for what I built? And that was kind of the fulcrum that really pushed me over the edge.
Wow. So it sounds like you get a lot of clarity in that particular moment. You
Yes.
remember pretty clearly that you said, "Hey, I cannot stay on this path a day longer. I got to do something right now." And so that's when you got into this house hacking thing. What was your, at the time when you did this, or you got into this house hacking thing, what was your plan? Like, what were you going to do? House hack, and what were you going to do back then? Like, what was your kind of plan in your mind?
So just like many listeners here, like I obsess over bigger pockets. And David Green and Brandon Turner were kind of my pseudo mentors. And Brandon Turner said during on one of his podcasts, he's like, if you house hack 10 multifamilies in 10 years, that's 30 units. And that's essentially was my plan going into this, was like, I had a strong W-2. I could save up 3.5 to 5% down every single year of my W-2. That seemed feasible. So my plan going into it was house hack 10 multifamilies in 10 years and, ride off into the wind, into the sunset. That was kind of my plan going into it. It did grow over time, but that was initially my plan.
And it's not a bad plan, right, Andrew? I mean, most people don't even have that plan, or they try to save them well to retirement so they can retire at 65 years old. And most Americans don't even have enough money to retire at 65 either. So your 10-year retirement plan was actually pretty good, right? Now, but it sounds like you did it faster than 10 years. What happened after that? After that house hack, what did you do next after that?
So after that house hack, I really wanted to scale as quickly as possible, but I didn't really know what to do, right? So what did I end up doing? I ended up finding a mentor in my local market who owned hundreds and hundreds of units, right? And rather than just go up to them and ask them, can they be my mentor? I intentionally went and provided them value, right? So I provided them value in the form of becoming agent under their brokerage and then providing them commissions. I provided them value in the form of creating a real estate meetup in Worcester, Massachusetts under their brand and increasing their brand recognition, right? And then suddenly when I started one of the largest real estate meetups in Worcester. I'm a top producing agent on this person's team. They suddenly start answering my calls and they suddenly feel the need to take me under their wing. And to my defense, it wasn't a surprise. It's just a simple concept of reciprocity, right? So that's really kind of what excelled me. in real estate, and then at that point, I was starting to get a little momentum going, right? And one of my guest speakers at my meetup, they were just in the Bigger Pockets rookie. And then after they present, I explained to them, like, it's always been my dream to go on the Bigger Pockets podcast. And right when I mentioned that, they ended up introducing me to the producers. And I ended up going on the Bigger Pockets podcast. And then from there, that's when my career trajectory kind of exponentially grew.
Why did you feel like you needed a mentor at all? Because a lot of people, they just try to do it themselves. What made you come to the conclusion that it would actually be good for you to work with someone a little bit more experienced?
So, just like I don't know if anybody here plays video games, right? But in video games, there's this thing referred to as power leveling, right? Like you can jump from level 1 to level 60 very quickly when you surround yourself around other people, who are experienced in the game. And it's the same when it comes to mentors. I more or less skipped 5 or 10 levels as an investor because I had them to lean on at every single corner, right? And they've saved me so much money and saved me from so many roadblocks that my career would probably be 25% of where it is without their tutelage.
Now, so you learned this lesson from video games, or did you learn that some other way?
I've actually learned a lot of my strategy through video games. Like I grew up playing video games. I grew up playing World of Warcraft, right? And the thing about those particular games is you create this amazing avatar, the perfect avatar in this virtual world, right? And what really was the wake-up call for me was, why am I creating this perfect persona in this fake reality when I have all the ability and all the skill to do this in the real world, right? And that's kind of what opened my eyes. Why real estate was so powerful. It allowed you the tools to create the life that you dreamed of.
So what happened to your one small multi per year 10-year retirement plan? What happened to that?
It went right out the window. I think in my first year, I ended up buying 3 multis, right? And then at my second year, I bought like 3 or 4 more. And then my third year, I think I bought 10 or 20. And then it's just been exponentially growing since then.
And why did it accelerate then? What happened that made it thing go a little faster?
So what really made it grow exponentially was, when I first started in real estate, I was a one-man army. I did all my bookkeeping. I did all my deal finding. I did all my deal structuring. Like it was me doing everything, right? And then after I got up to about 18 units, that's when I decided, I ran across these larger deals, these 5 or 6 plex properties, but I didn't have the money to take it down. And by the way, my DTI was through the roof at that point because, I have all these mortgages under my head. So at that point, it made sense to partner with people, due to the fact that, I could utilize them as a key principal, but also due to the fact that we could leverage their strengths, right? So I started partnering with people and leveraging different strengths and seeing the power of when I focused on what I was good at and I delegated what I wasn't good at, the power, the growth that allowed, right? So, from partnering, I think I got to 18 to 30 units by just, joint venturing. And then I ran across my partner, Zach Gray. And Zach Gray, I don't know if anybody read the book Traction, but they have this verbiage in there called the integrator and the visionary, right? And Zach is a master of execution. You give this guy a renovation budget, you give this guy a property to stabilize, he'll get it stabilized within 2 to 3 months, right? This guy's a freaking beast, right? And combined with that, I'm really good at the back office. I'm really good at strategy. I'm really good at making sure the systems and processes are in place, right? So, when I could focus on my genius of building the organization, of building the processes, of developing the network, and he could really focus on his strength of execution, that's when our portfolio grew exponentially.
Now you mentioned something called partnering, which, I flipped through 3 dozen houses and I didn't even know that, this thing even existed in partnering and it's always held me back as well. How did you learn this idea of partnering? Because it's very foreign to people.
Yeah, I mean, partnering does come down to leveraging other strengths and mitigating weaknesses, but ultimately it comes down to trust, right? Like people don't partner at an intrinsic level because they have trust issues, right? And there's ways you can do to get over that, right? Like I've had trust issues in business. Like I've had businesses go south with other partners. And some ways I mitigate that is I control the money, right? I control the money. I control the business plan. I delegate their responsibilities, right? Like I have probably 100 partners out there, all are successful. It's because, I have control of the deal, right? Partnerships, in my opinion, tend to go south when you give up that control to somebody who honestly doesn't have the ability to handle that control.
So partnering does open up a lot of different ways, and syndications are really based on partnering.
Totally.
I mean, just look at the partnering with GPs and LPs alone, but the
Absolutely.
GPs typically, I mean, it's very rare that you have like one single GP that does everything. There's typically at least two in there, and a lot of people, I think that one of the reasons they don't do it is either they don't know about it, and then number two, they have these trust issues. How do you overcome some of those trust issues? So, if you had some trust issues, how did you overcome that, or what was your advice in helping people overcome trust issues?
So my advice when it comes to overcoming trust issues is, being very clear and concise about responsibilities, but also, like I said, control the bank account, right? Like, if I'm handling I'm partnering with another syndication group on a 50 unit portfolio, like I assure you, I'm gonna have access to that bank account and I'm gonna be approving every cost that goes through that bank account, right? That's an easy way to have control over the deal. But going back to your original point about partnering, the great thing about syndications, in my opinion, and some of these larger deals is you don't have to bring all the pieces of the puzzle, right? Like you can be a good capital raiser. You could have the net worth to back up the deal. You could be fantastic in construction management. You could be a great at property management, right? There's different pieces you could bring to the table that provide value to the whole, to the entire group as a whole.
So you were able to accelerate your number of deals that you bought because you were partnering with people with joint ventures who brought in capital specifically. Is that the biggest thing that they brought to the table?
Yeah, that's exactly correct. So my group, Freedom Management, we're skilled in every aspect of syndications and joint venturing. We can raise capital. We have the balance sheet to back to guarantee any loan. We have a property management company that could stabilize any particular property. We are very versed in construction management, right? So we have all the pieces to take down a deal. And the reason why we've been have such success is other syndication groups that may be missing a piece, they know exactly who to come to, and that's us, right? We could take down a deal ourselves. We could take down 50% of the deal. We could take down 25% of the deal, depending on what role that syndication group needs.
A lot of people they're just hesitant to raise capital, right?
Mhm.
What what was that like for you? Was that kind of an easy thing to do? Start talking to other people about money? What was that like for you?
So I'll be honest with you. The first time I raised capital, it was awkward as hell. Like it was the most awkward thing to ask people for money, right? But I learned early on that first of all, you're not asking people for money, you're giving them an opportunity. Most people in this world, normal normal folk only have access to stocks and their primary residence and 401k. They don't have many investment opportunities, and to be able to offer them these alternative assets is a huge value add in my opinion. But more or less, that was the big turning point for me is when I wasn't asking for money, I was presenting an opportunity. And from there, that's kind of really what excelled my ability to capital raise. But at the end of the day, it really all came down to getting one deal under your belt, right? Like the first syndication deal that I did, at the end of the day, it wasn't that lucrative for me from a capital standpoint. Like at the end of once the deal comes full cycle, I'm not making that much money. I think there were 7 GPs on that particular deal, right? Like I probably like 5-6% of the GP. But what it really allowed me to do was to build up network capital, build up credibility to be able to raise on more lucrative deals that I had down the road. So that was really a big turning point for me.
What's the difference between not asking people for money and giving an opportunity? Like, what is that conversation? How is that conversation? Give me like a before and after conversation. Andrew, quote, raising money to Andrew presenting an opportunity.
Yeah, I think initially, you go up to them and be like, "Hey, do you want to give money on this particular opportunity, on this particular deal?" And here's why. And it just came from the point of perspective, like you're asking for a favor. Versus, when I'm presenting an opportunity, I'm like, here's the return you could get. Here's the details of the deal. If you're interested, great. If not, let me know. Let me know if a friend's interested. It's just how you approach it. But ultimately, I think it comes down to just having the track record and the credibility to actually, trust in yourself to feel comfortable asking for that, right? Like prior to that, I didn't really have the track record on such a large asset. And at an intrinsic level, I don't even know if I felt comfortable asking for the money.
And you did it anyway, though.
I did it anyway. That's correct. Yes. And we did come up short on my first capital raise, but thankfully I had that mentor in my back corner who ended up coming in the 11th hour and raising the remaining funds.
Yeah. Yeah, that's really interesting. Yeah, you just got to get out there and just kind of do it. It's a little uncomfortable. Are you more of a natural capital raiser, or are you a little bit more of a natural operator, deal finder, like deal finder?
I think I'm thinking a little bit of everything at the end of the day. To be frank, I'm an introvert. I'm not that great, at asking for capital. But what I will say is practice makes perfect, right? And at this point, I've raised upwards of $20 million, right? Me and my partner have raised upwards of $20 million. And practice makes perfect. The more you do it, the more the more I'm an introvert. The more I get on stage, the more I public speak, the more I go on podcasts, the better I get. And it's the same with capital raising. It is absolutely the same with capital raising.
What were some of the biggest lessons you learned from your first capital raise?
I think the biggest lesson I learned from my first capital raise is whatever you think you can raise, cut it by 50%. That's there's a big difference between somebody saying they're going to invest and actually wiring the money.
Yeah. Yeah, absolutely. Absolutely. So you're building this portfolio together, and at one point you started to self-manage. Is that right?
I've actually self-managed since the infancy, right? And honestly, I really feel like that's our secret sauce because our buy box is typically 2 to 30 unit multifamily properties, deep value add properties where we're buying them at 20 to 30% discount. Maybe rents are depressed by 30, 40, 50%. And the reason why, at the end of the day, I really didn't have a choice but to take on property management in-house is because between the 2 and 30 unit range, you can't have an on-site property manager. So you actually have to, if you want to manage it effectively, in my opinion, you have to have an in-house property management company. And that's what we did. And currently we have about 17 employees that help us manage these small kind of multifamily assets.
Interesting. Now, if you were to look back on your history of investing, and you could sit down with your younger self, what would you advise your younger self? I mean, I wouldn't say there's things you regret, but certain things maybe that you now know you would do things differently or better or faster.
Yeah, I mean, I would definitely tell my younger self, and this just relates to just life in general. It's just, stop being a know-it-all dummy. Going prior to real estate, I was definitely a know-it-all. I had all the answers before the questions were even asked. And the deeper I went into this entrepreneurial sort of world and the deeper I went into this real estate world, I came to the realization that, your success is directly correlated to your level of self-development, right? And a lot of that comes from the point of perspective. A lot of that comes from the perspective of you have to be curious and you have to be open to feedback and you have to be coachable, right? And initially, I was not very coachable. I knew it all before I had all the answers, right? And that's absolutely the wrong approach to approach business and approach real estate, in my opinion.
Yeah, if you're investing in single family houses, those things they don't matter as much because most people are familiar with buying a house because they typically have one, right? So you you're allowed to be a know-it-all because it's not holding you back. But when you get into something like a syndication, for example, being a know-it-all really holds you back. And a lot of people don't know that. They're like, "Oh, I want to do this thing," and then they struggle because you're trying to be a know-it-all.
Yeah, I mean, I'll just give you a quick example. Like I went to a real estate conference last weekend, and I met somebody who probably had 20 units under their belt, was very, lower level investor compared to myself, right? But I'm telling him how I structure my flips. I structure with promissory notes combined with hard money. And he was explaining to me, he's like, why don't you consider a debt fund, right? If you did a debt fund, you could borrow that same money at 7 to 10%, and you could collect the delta. Your deals would be way more profitable, right? And I was like, that's a really good point, right? And if I wasn't open to feedback, if I looked down on this person because they had less units than me, that wouldn't serve me in the long run. But the fact that I was susceptible to that information, that one piece of advice alone is going to have a major impact on how I do flips in the future.
Interesting. Yeah, you gotta build a certain kind of humility. Otherwise, it's very difficult for you to learn something from anybody, really.
Exactly.
So what are your goals now for the next year or two? Are you guys buying? What do you plan on doing?
So this year alone, we already closed on around 150 doors, right? And people, people are questioning, is now the right time to buy with interest rates being so high? At least in my particular market, now's a fantastic time to buy. I'm buying in places where, the post stabilization is a 10 cap, when we're borrowing at a 6 or a 7% interest rate, right? So the numbers make sense all day where I'm at. Additionally, in Massachusetts, there's absolutely no syndicators, right? People avoid New England. People avoid these tenant-friendly states. These tenant-friendly states because they have a misconception of how to manage in these particular markets. Massachusetts alone, we have one of the strongest Section 8 programs in the nation. During COVID, Massachusetts did not see a decline in house values. House values actually went up. And in my market alone, Worcester, Massachusetts, fair market rents or HUD rents, what Section 8 pays, went up 11% year over year, right? So, I'm buying and I actually am doubling down on buying, especially in the New England market where other people avoid.
It's interesting because in general, the rule of thumb, rightly so, is to avoid areas that you're investing in, unless, of course, you make it a specialty. Section 8 can be very lucrative in many markets. They pay a far above market rents as long as you, know how to deal with that. And it sounds like you kind of developed a niche like some people might do, for example, in student housing, also kind of a special niche. Why is that working for you? The whole investing in that market, focusing on Section 8.
Focusing on Section 8, but also having a high level of emotional intelligence, right? Like, because in Massachusetts, it's very hard to evict people. If you're going through a formal eviction process, normally it takes 4 to 6 months, right? But if you know how to creatively structure deals, like if you offer cash for keys to the tenant or you place them in another unit, right? There are ways you can work where it creates a win-win for everybody involved. So, um, yeah. Sorry, I lost my train of thought.
On outlook here, you're buying right now, and the reason you're buying is there's not a lot of competition in your market. The deals are penciling. But what
Correct.
about the fundamentals, the outlook of multifamily in your area? How do you assess that?
um at the end of the day, the fundamentals are, it makes sense. I mean, I'm underwriting our exit strategy at, a 7% interest rate. We're able to refi 50 to 100% of our capital out even at those high interest rates. So I'm not praying that interest rates will go down for my business plan to make sense. My business plan makes sense at the status quo, and if interest rates go down, it's only icing on the cake. But that doesn't determine whether my deals make sense or not, right? And you're asking, like, why am I still buying in this particular market? Like, for instance, my rent collection across my 300 plus units is 97%, right? So people are paying rent where I'm at, and they're actually paying very high rents compared nationally to the average. So I'm having a lot of success in this particular market, and I will continue to buy in the foreseeable future.
What do you think is your biggest challenge? Anything that's kind of potentially keeping you up at night, or at least an eye open?
Uh, yeah, I mean, I would definitely say the one concern I have is, I definitely feel like the residential market is softening a little bit, right? And that puts concerns on my flipping side, right? Thankfully, I do try to mitigate that risk by only flipping multifamily, like 2 to 4 unit properties. And the reason for that, if I can't sell for the price that I want, I can simply throw renters in there and keep it as a cash flowing asset, right? But that is the one that does keep me up at night, is I am feeling, the residential market softening a little bit, based off what I'm seeing.
So, Andrew, how can people connect with you, find out a little bit more about what you're doing?
So people can find me on Instagram at Investor Freed, and they can also find me at Andrew Freed on Facebook or LinkedIn. I'm very active. I'm always putting out free content.
That's awesome. Everyone, check out Andrew Freed here. We'll put that in the show notes as well. So, Andrew, thanks for being here, sharing your story today.
Thank you, Michael. Thank you for having me.